Press subscribe.
Press subscribe.
Press the bell.
Press the bell.
Press like.
Press like.
Change your life one word at a time.
Hello, today is a special day. So today we learn all about the basics of cryptocurrency, all about the investing in the Bitcoin and the stock market and what to look out for. Hello, so welcome to my channel. I normally start my day with affirmations. My daughter's not here, she's the one that normally says it, but we start the day saying we're great, we're smart, we're wonderful. Thank you, Jesus. It's going to be a wonderful day, so we can confirm how our day is going to be. But today I'm going to go straight into other things. How to know what cryptocurrency is and how to invest for beginner's guide to cryptocurrency. So let's start with the basic. What is cryptocurrency? So cryptocurrency is like digital money. You can see that means there's no physical coin, because remember, money, fiat, all of that is a physical aspect to it, but cryptocurrency is all digital. But bear in mind, even people that were saying, oh, digital money will never work, bear in mind, even though fiat does have a digital representation of the money, there's actually more digital money than real physical money. Because in your bank account, many people using cashless cards and things like that, in your bank account, there's loads of pounds, loads of numbers, just numbers on a system that represents your money. So even money technically is already digital. The only difference is that money can be represented by a physical thing, whereas cryptocurrency is all digital. That's all. So basic cryptocurrency is digital money. It's all online. You can transfer cryptocurrency to someone online without a go-between like a bank. Bitcoin and Ether are well-known cryptocurrencies because we know Bitcoin started ages ago in was it 2000 and where was I looking? Was it 2009, I think? Where is it gone? I think I had it up here. So I'm going to go up to the site. Yeah, so Bitcoin's basically the daddy. So number one. It's the one that started everything, and then through that people started making other ones. Ethereum is like number 2 in the coin charts. It's a big ecosystem. So number one thing to know, cryptocurrencies are just like digital money. But next thing to bear in mind, the good ones also have a utility. They have a use. So just like how you would invest in any company, the same things you would look at if you're in the stock market, or if your friend came to you or people said, oh, there's this new idea, there's this new business thing someone's trying to do. Should I invest in it and give them some money to be able to get a return? It's the same things you have to see with cryptocurrency. Follow the same steps. I know a lot of people are looking at, oh, everyone's got this, I should get in. That's called fear of missing out. You see everyone's doing something, so you try to join them without looking and researching, is this utility, or is this company, or is this money something worth investing in? So let's first look at basics of any company. So 10 factors. I'll start with 8 actually. 8 key factors to know about a company before you invest, because you must think of cryptocurrencies as small companies. So the new idea, will it work in the future? Even Bitcoin is still technically an idea. Though it's been here for over 10 years and stuff, it's still an idea of, will it become money? And then no longer, some people are not trying to get it to be money now, will it store value? Because that's the next use of it. Can it store value? So just think of these things as small companies, new ideas. That's the key. Some don't even have ideas, but that's key. Think of all cryptocurrencies as new ideas, new companies. Therefore, what to look at when you invest in any company. So 1, start with the CEO. It's very important to understand the team and the leader of a team, because even with Tesla and stuff, when people saying Tesla's overvalued, we weren't really caring about the price of Tesla. We believed in Elon Musk. We believed in the CEO, the richest man in the world. So because he's backing something, we're more willing to stay with Tesla and buy it, even though the books and other stuff are looking like, well, it's not making all the profit that it should be making for a company worth this amount. So technically many will argue it's overvalued and stuff, but many believe in the CEO. So number 1, look at, and cryptocurrencies have websites. If they don't have a website, explain all these stuff, then that's more where, why would you trust it? Because it's all about still, even if you look at all the things I'm suggesting, there's still where is the aspect of risk versus reward in any investment. So if you don't even know the CEO and you don't have any information, then your risk, you're even giving yourself more risk. But let's see. So look at the CEO. You can look at the website. For example, although Bitcoin, that's the exception. With Bitcoin, and it's decentralized. So some of these, there's no owner, but you can still look at how the ecosystem works. because Bitcoin is called proof of work. So the more mining power you have and the more computers, the more you're able to mine it. And then by you mining it, the mathematics behind it, in a sense, I guess for Bitcoin, is the creator no one knows. So Natiso, something no one knows. So in a sense, that's the creator, but he's no longer in control of it. So it's still got some kind of, in a sense, CEO, but it's not really a CEO because it's all decentralized, which a lot of cryptocurrency is. But if we just keep it basic, look at for these newer ones like Cardano and even Polkadot. Some of these you can look at their CEO and you'll find out Ethereum's the second one, but some of the people that worked on the original team of Ethereum are the ones that made Polkadot and the ones that made Cardano. So that can give you confidence that look how great Ethereum's doing, a big ecosystem, which I'll talk about later, because even Ethereum is very big. So even though many people will be thinking, oh, look at the price of this, Bitcoin's too high, Ethereum's too high, and you'll be looking at these cheaper prices and be interested in the price, there's other things to look at, like market cap and things like that, and the supply of how much coins are left. But we'll look at that as well later. But first, what to look at when we're investing, we said. So definitely look at the CEO, we said. So check out their career moves and details of how they helped their previous companies and current company grow. I think there was one I was into, forgot what they're back, but when I looked at CEO, they were the same ones that made like the swipe card, a curve card and other cards. And I could see, oh, they have a history of being innovative and they've done other things in the business world. So I can trust more that they know what they're doing. And if things go wrong, they'll be able to move around their business model to help grow their business, which will grow my money. So look at the CEO too. Review the company's business model. How a company makes money is referred to as business model. While there isn't a single way to run a business successful, companies should be positioning themselves to maximize profits. What to look for. When researching a company's business model, learn about its products and services, target market, and the industry it's competing in. For example, so with crypto, can you say what the business is? What is the use of it? What's its users? Is there adoption? Is there mainstream people that are going to be able to use this? Because remember, think about crypto more on a decentralized world. It's a new thing. Less people know about it, where you've got the mainstream banks, mainstream people that are used to using cash and fiat. So all of this is, can you see their vision? Will they get enough community, enough people using it? So that's the things to be looking at. Their business model of even the ones they do have, are the incentives for people to be making money that join them, because that's where DeFi comes into play. DeFi is decentralized finance. So look at that use cases. By me putting money in that pool, I can make money just by being in that pool. So those are the business models, or even with mining, so even Bitcoin, their business model is by me getting a computer and mining, taking care of the whole Bitcoin ecosystem. I make money from that. I earn Bitcoin by helping Bitcoin to stay safe, by being an auditor, essentially being a miner, because those that mine are the ones that confirm transactions and confirm things are running smoothly. And the more I confirm it, use my computer power and electric to do all that, I get paid with that. So that you can think about the business model like that. Same with Ethereum, which is also proof of work, but they're moving to proof of stake as well. But that's all the business models. So look at how the tokenomics of a coin works, how the tokens are issued to people, how the users will be incentivized, how the users will be given money or anything like that. So the business model. 3, consider what competitive advantage the company has. So are they unique? What is unique about them? Like Bitcoin, they're trying to be mine. They're unique in the sense of they're number one, and they've got the mainstream. They're the biggest market cap. They've got the most people they started, but there's others coming behind them trying to be like Bitcoin and become a store of value or become money, which is all Bitcoin's trying to do. So what is unique about these new ones? That's the key with all these new ones that's trying to essentially be Bitcoin. What is unique about them? Whereas Ethereum as well, they were unique as where they weren't trying to be money. They were just trying to be an ecosystem where you could have apps, you can have other things running off of using the Ethereum tokens, and other new tokens can come and use the coding of Ethereum language and make their own money and make their own apps and do whatever they want, just be part of the Ethereum train. So it's got Ethereum's a train, got other cargo joint to it, and it makes an ecosystem. We can do all these things. So one person might be on lending money to people, but they're using the Ethereum language. Another person could be on staking money, but they're using Ethereum language. Another person could be on insurance and property and all this other stuff, but they're using the Ethereum language, and the Ethereum coin has to work in between all these other ones. So that's how the ecosystem is. So that's how Ethereum's the biggest ecosystem there is. And these newer ones coming, how can they compete with Ethereum? Like Cardano, Polkadot, the way they compete with Ethereum is to charge less fees, because Ethereum miners, the way they get money, their business model is by getting mining fees and charge. So when we doing transactions, there's little fees because it goes to the miners, and that incentivize the miners to be able to keep the ecosystem working smoothly and stuff. So that, and Ethereum, one thing big about Ethereum is they got the stablecoin USDT, where even Visa and big other companies are deciding to use this, because Visa system is very old, where sometimes you might, as transaction days, clear all things at the end of the month and things like that, and you might find something's gone wrong, that even a company still has to go on the phone to say what's happened to this check or what's happened to my Visa, thing like that. The transaction hasn't gone through. It's a very dinosaur system, whereas now they're trying to upgrade to use stable coins, which will be fast, because the cryptocurrency is about being stable, about security, it's about scalability, being able to do things fast, how much transactions you do per second, per minute. It's about doing things fast. So even Visa and things are turning to stable coins, and at the top stable coin is USDT, which is based off of the Ethereum system, which needs Ethereum. So this is why Ethereum's a big ecosystem. But you got ones like Cardano and Polkadot, which are trying to compete with Ethereum, and they're doing well. And because they're going to offer people to have lesser fees, because the next thing, Ethereum has max supply. It's no ending supply of how much Ethereum tokens can be made, where normally people don't like that, because you've got no max supply, then the supply versus demand is affected. You can keep on getting supply. People will not need more demand because there's infinite supply. But in reality, there's more complicated for Ethereum. They got ways they burn their tokens and different things on how they release their tokens. Is so, even though it's max supply, but they got a way of helping inflation with the way they release tokens and things like that. Whereas Cardano, Polkadot, they have got a certain max supply. So, because technically once supply gets too high, and people got certain stuff, demand can go up, prices can go up, because there's limited supply. That's the point of Bitcoin as well. There's scarce. There's only 21 billion ever going to be there. There's only like 18. There's only 3 billion left to mine and things like that. So it's very limited supply. So that's how money works. Same as gold and things like that. How things became money, because it was scarce, it was divisible, it was portable, it was durable, it was a store of value. Things like that is what makes something money as well. So look at what their uniqueness is. 4, examine revenue. Now, these are more things for normal stocks. So examine their revenue trends and price history. That's things for more normal stocks. Access net income growth year to year. So you can look at, that's more normal stocks. Look at their profit margin. Looking at debt to equity ratio, analyze price to earnings ratio, P ratios. Now that's about normal stocks, but some new companies, because we're thinking of crypto's new companies, they might not be making profit yet. They might not be doing any of that yet to analyze their books and the company records and things like that. And they're decentralized, so it's not really a case that they'll have all that information in hand. So crypto is a bit different, but we'll still be looking at some basic things. So let's see. Still with companies, so other 10 things to look at. Do you understand the business? Can I explain simply what the business does? In simple words, can you explain what Cardano does, or Ethereum does, or Bitcoin does, or any of these new ones like BTT I'm in, or Enchcoin and NFTs and all these other ones, Mana, all these other ones I'm in, Harmony, Layer 2, Matic, Polygon. Can you explain what their business model is? What's unique about them? And remember the information on the website. 2, can I approximately estimate the key financial characteristics 10 years out? So that's more to do with normal business, because normal of investing, you want to be thinking 5 to 10 years. It's not about some people trying to make money quick, but it's not always about that. It's about, can you estimate how much return you can get in 10 years and things like that. And people with Bitcoin and stuff, people have seen its stored value. So more people are jumping in, because if you look at what's happening in the bull cycles, it reaches a certain amount, then it halved. Then another 4 years, it passed what last all-time high was, went, make new records, and then it halved. And it's been doing that. So it has some kind of data, has charts, has trends that we can use to analyze the price history of things. So though there's risk versus reward in that, there's some data, where some newer coins, there's not much data. So it's about what is unique about them. Have they got community? Have they got use case? are people going to use them? Is there mainstream adoption? 4, is the management honest? So with some new cryptos, it's about the management and what they've done. If they got a proven track record of choosing good projects that's worked, so then I can trust this new cryptocurrency that's work. Will it work? Is the management competent? What fundamental developments would be responsible if this investment to fail? So even with cryptocurrency, what some people don't know, bigger ones, they get auditing. So even though it's a risk because it's all digitized, but they use safe auditing companies that will audit them and show, have they thought about what happens if they're hacked? Have they thought about what happens if the system fails or things? Is there any compensation? What would they do? Have they thought about these? Is there white paper? Is there key tokenomics there? So they've thought about certain things, how they're going to even release their coins to stop people from just dumping straight away when they join the stock market, because you might be in it before when it's private, which is the key thing with some. Can you get in before they even join exchanges and stuff? Because you might be in there, but once you join the exchange, everyone just sell and get that profit and they'll dump. So have they thought about all these things? And many new ones are releasing things slower and stuff. That's why I mean YFDAI. YFDAI is a good one because by participating in YFDAI, you get access to the new projects that they launch in the launching pool. The same with launch pool XYZ. I'm in that one as well. And you're earning passive income by staking and farming these pools. But by you doing that, you also be able to be new projects that they're trying to launch finances for. So what else? So, but with crypto specifically, so how to identify the next big cryptocurrency investor. But let's see. Tips on how to choose which cryptocurrency to trade in. So we can see the cryptocurrency market was born in 2009 after the launch of a project called Bitcoin. We said, choose your level of risk. 3, conduct independent research. 4, be on the lookout for possible ICO offerings. So that's initial coin offering, like I was saying. Some ones before they join the stock markets are called IPO, but with crypto, before they join like a big exchange like Uniswap or Binance, or Coinbase, before they join these big exchanges where buyers and sellers can come and buy, look out for some of those. 5, and that's what I was saying about YFDAI and some launch pools. By being in staking with them, you can then get offered new coins before they get an ICO. You can get private sales and pre-sales, but you can ask me more on my Telegram. 5, look into unknown crypto exchanges. Be aware and vigilant. So what's the tips? So we've got, since the launch of Bitcoin, many players have joined the market. Aside from Bitcoin, other top players are Ethereum, Litecoin, and Ripple. Ripple's dropped in rankings, but their use case was they're going to be able to be adopted by mainstreams, why many people flocking to them, being used by banks and things like that. So conduct independent research. While listening to a company's representatives and ready opinions is important, nothing gives you better judgment than conducting independent research before deciding to trade Bitcoin /USD versus ETH/USD or any other cryptocurrency. Look at the historical charts. Areas to pay attention to should be circulation and market cap. While price is important, it's not something to get stuck on. Look for stability and dig up a cryptocurrency's full history. A digital currency could still be in its growth stage and might show a record of continuous growth. On the other hand, it might have a history of big peaks and large corrections. Avoid currencies that have suffered large drops in their market cap. This is an indication of dying demand. Find out as much as you can about the company offering the cryptocurrency and the problems it intends to solve. What is it trying to solve? The key thing was its use case. Seek offerings that have innovative technology and strong backing of the idea. Research on the leadership of the company, the technical team, and the track record of the CEO. Be on the lookout for possible ICO offerings. Look out for unknown crypto exchanges. If you missed out on ICO, you have a chance to buy the currencies on cryptocurrency exchanges. Most well-known and established exchanges limit the currencies they trade. You're likely to find a better investment on lesser-known platforms because Coinbase has very few. Binance is getting more and more. You got ones like Crypto.com's got more. You've got Kraken, what other ones have I got? Bit4x and things like that. So unknown exchanges like those in other countries. To protect your investment, conduct independent research on the crypto exchange. And remember, all of this is not financial advice. You should only be investing money you're willing to lose and willing to leave for a while. It's not about trying to make money real quick. Be aware and vigilant. Choosing which cryptocurrency and altcoins to trade can be a daunting task. Sticking to the facts and not making emotional decisions will help you to select the investment that will be right for you. What else have we got? So, how to identify the next big cryptocurrencies? Got price is crucial. One element to keep in mind when scanning for the next superstar, it's the price of the token. For the average investor who doesn't have a great deal of money to put into the cryptocurrency space, low price currencies may offer the best bang for your buck. Also be looking at prospects for adoption. Heading into 2008, Ripple made huge growth while XRP has declined somewhat since the start of the new year. It nonetheless has strong potential for adoption outside the cryptocurrency speculation world. Is why many people are on it, though it might not be XRP they use particularly, but Ripple linking XRP to another bridge one and things like that will be how they get the mainstream adoption for the banks to be using and getting to cryptocurrency to be able to do that fast, send the money fast, which is the problem banks have as well. So what else have we got? Supply is a factor. Most cryptocurrencies have a predetermined maximum supply. When that maximum is reached, typically through mining efforts, no new tokens will be produced. If interest maintains, so if there's still demand for it, and the supply is fixed, the price could go up because people are still demanding something and there's a limited supply. Be sure to consider total supply and the current circulation of any cryptocurrency before you invest. Price and volume. Up-to-date information about cryptocurrency trading is easily available online. With things like here, we've got CoinGecko. You can see it's got all the information about all cryptocurrencies. So we've got here, trading is easily available online. Those digital currencies which with increase in price and volume of trades are likely to be those that have momentum going forward. Of course, there's no guarantee that this momentum will maintain, but it's nonetheless a useful way of seeing which digital currencies have the most investor interest for the time being. So you're looking at where the wave is, where's the volume, and where's the volume being. Investing in cryptocurrencies and other initial coin offerings is highly risky and speculative, and this article is not a recommendation by Investopedia or the right art to invest in cryptocurrencies or other ICOs, since each individual situation is unique. You need to think about your own money. But so what have we said? Cryptocurrencies see as it's just digital money in one aspect, or they're solving a problem. So there's small companies trying to solve a problem in the financial world, for example, because DeFi is about we have to go to banks to borrow money. If our credit rating is bad, even say I have 50,000, I go to the bank and my credit rating is bad, and I'm saying I'll give you my 50,000 as collateral, just lend me 50,000, and you've got my money, they can still say no. Whereas cryptocurrency and some use cases of some of them is like, that's unfair. You should be able to lend money. If you put 50,000 into the pool, you can lend 50,000. It's very simple. And I can borrow money from anyone in the world. So that's a use case for many DeFi projects, tokens, cryptocurrencies. That's a use case. Some of the use cases are now NFTs, that I should be able to swap this asset for this asset easily. So just by owning this house with this NFT shows I have ownership, I can swap that for this other YouTube account or something because you own this asset and I want that asset, easily swap. Or people couldn't really buy houses together unless they have a certain amount of money. Now with an NFT, we can all buy a piece of a house and get in the stock market with NFTs. And so what is the use case? Some of them is just art. I own this collectible, things like that. So what is this use case? Then we've got websites like CoinGecko. You can see, so things I check where you can see also momentum is if you go to 24 hour, you can see what's been going really well. Like Engine Coin was the number one NFT a while ago, but if we go here, you can see it's other ones have now joined, because before there wasn't an NFT watch list, but now other ones have been put there. So it's no longer number one, but Engine Coin is very good. If you look at my previous video, I explained all about Engine Coin. And they've gone back to second. Chills is another one. I haven't got into that, but it's another one on my watch list. I talk about Omi is another one, and Man is another one. Because to me, looking at these big ones, their market cap is still small. So even though they're top of the NFT list, their market cap is very small. They're not even in the top. Let's see. This is number 3. And if you click on them, you can see they're ranked 50 in crypto. And bear in mind, crypto, there's 6,656. So the next thing to realize with crypto, like we said, good ones have a use case, have a good CEO, have plans on what they're doing. there's still, but anyone can make cryptocurrency. There's software there that can just clone Bitcoin and call it a different name, and I've made a cryptocurrency. It's just about if I get people to use it. But if you go invest in that, you don't know who made it, what was the purpose they made it, you could just lose all your money in a sense, because no one's using it. You bought it, made the price go up. The person that made it sells, made their profit, price goes down because no one wants it. People are selling, no demand. People are selling because if you're selling, I mean, there's no demand. If people are buying, there's demand, isn't it? So if you don't know who made it, so that's why there's 6,000. I've never looked at the bottom one and looked at why they're at the bottom, but there's 6,000 cryptocurrencies. And the top ones, we can see these market caps. So some things to look out for in this, what we call this bull cycle of where all cryptos as a whole have been pumping in general, especially led by Bitcoin. Because if you look at the Bitcoin cycle, a lot of these are led by Bitcoin, and Bitcoin goes sideways. Then the altcoins, which include Ethereum, the other coins, start pumping. They have what we call an altcoin season, where Bitcoin's kind of slowly going up or slowly sideways. And you can't predict when things will stop or start going up and down, but some use metrics to see like Bitcoin dominance. Sometimes you can see altcoin season started when Bitcoin dominance was like here. You can see how Bitcoin is 53 dominating the market. ETH is 11% dominating the market. And historically, when Bitcoin dominance has dropped down, that is lower than the alt to a certain, like say 50% of stuff, then it's normally became altcoin season. The other ones are now pumping and things like that. There's different ways of looking at YouTubers, and even with information gathering can be looking at what others are saying, but that can't be your only thing if you're trusting just a random person on the internet, which will also, like me, tell you it's not financial advice. But here we can see, so Engine Coin 44th place, market cap is only 3, and some of the things to be looking out for is, like we said, a total supply. Is there room to grow? Because I can imagine this could still do a times 10 theoretically and be at $30. And if it was at $30 and it's trading and its market cap would be at 30 million, I mean 30 billion, and 30 billion would put it where? 30 billion would just be putting it like up here, 7th place, 6th place. Bearing in mind, these could have also gone up. But the question is, can some of these smaller ones you could even look at ones that are not even a billion, ones that are millions, do they deserve to be higher up? And how can you tell they deserve to be higher up is who's their CEO? What is their use case? Have they got community? This is the things. It's not rocket science, because if it was rocket science, everyone would be making crazy money. But this is where the risk versus reward is very high on crypto, because it's more risky, because it's very volatile. We can see here, compared to the stock market, remember, all of this is about banks saving your money in a bank. You might get 0.5% interest, if that. We can see in 7 days, some of these ones in altcoin season, 184%, 146%, 144%, 85%, 67%. And if I go minus, you can see big drops in 1 week. 40% drop, 33% drop, 26% drop. Now, some of these we call discount, like Ecomi, they got their own exchange. The good one with good use cases, in my opinion. 24 hours. So just yesterday, this has gone 50% up. If you put £100 in, you've made £50 already in 24 hours. But not major drops today, actually. So the biggest drop in 24 hours is only 6%. No major drops. But sometimes you can have huge drops. So 7 days, huge drops. So it is volatile. But the question is, another thing I normally do, so say I've got like most of my portfolio in the stock market, then I would even decide to invest between half to... Real investors do like 1% of their portfolio. So the way to minimize risk is, if you got money in houses or stock market, the way you minimize your risk is just by putting like 1% into crypto. That's what big companies do, but their 1% is still millions. For me, because I understand crypto and certain ones, I do probably have at least half of my portfolio in crypto in one way or the other. Some of it is through a mining company, which is still on the stock market, but that's still linked to Bitcoin, and how Bitcoin does, and mining companies is still linked to financial technology in a sense. But directly into crypto, I've probably got a third of my portfolio that's linked to an actual coin on whether it's Binance. So Binance is good because you can get more pairs. Like I can use my USDT to get a lot of these coins and buy it with USDT. I've got my previous video how to buy Engine, WRX and other ones. You can watch to see how to do that pair. Coinbase is another place to go just because you can get free tokens. That's why I tell people that ask me to join. Get Coinbase, just you show them your passport, your ID, whatever, so you can get verification. And then you're like watching the little free videos, watching the tutorials, and get free tokens. You get like £50 just by watching Coinbase. So I've got all my links below, but this is the basics of crypto. So just think of it as a small company. What would you do when you invest in any kind of new company? Even if your friend told you they're trying to build a new company, what would you ask your friend? You want to know what it is, who's going to use it, what's unique about it, why they think it's going to do well. So the same questions is what you need to do with cryptocurrency. You need to understand it before you invest in it. There is some still do the gambling aspect. Like you can see, for example, some of these coins have gone crazy in this week and stuff. Some might FOMO in and say, well, let me just try a thing. Let me just put my money in. It's been doing crazy things. There's momentum there. Let me just put my money in and see without no research. Some would do that. And you could do that and you could make money from that. But that is still big risky. And you want to, and if you were to do things like that, then you should have some mind in your head of, are you going to pull out at a certain point? When will you pull out? Or even the next thing to mention with cryptos, say you've invested in something you know is doing well. It's got all the things, but it's dropping. You've put your money, it's dropping. That's not even time to panic. If you know why you invested in it, if it drops to a certain point, like say 20%, 30%, you have to have parts that you say, you know what, I'm going to put, when it drops, you have to see that as a discount. So you actually, if you have money, that is, you put more in, because by putting more money in, you drop down your average so that when the money price does go up, you can get into profit quicker. For example, if I bought something at £100, it's now gone down to £75, I've lost £25. Yeah, but if I put money in at £75, that means the difference of that £25, say £12.50, by buying the same amount I put in, say I bought 50 shares, now I buy another 50 tokens or 50 shares. Now I'm in at, what's 75 plus 12? I'm in at that £87.50. By buying when it dropped to 75, I've now gone from my starting price was 100. I've now brought it down to £87.50. So that's less of a jump from that 75 for me to get to profit. And then I could even take out some of the ones I just put in, and I've minimized my risk by buying when it dropped. Yeah, so there's averaging down, buying on the dip to bring down your losses and put more in is another strategies. But remember to check all my other videos. And remember, it's not just about investing in the stock market, because with some of these things, it's about you could be given some wisdom and just be steered in the right direction. That's why, above all, it's invest in something higher than wealth and money. That's why I've got my book here, Divine Wholeness, because I believe money's stored up for you. You don't have to work hard and things for money. Money's stored up. They say the wealth of the righteous is wealth of the wicked is stored up for the righteous. I am righteous. Are you righteous? The money's stored up for me. I just need to position myself in the right place where I can get that wealth. It could be in the stock market. It could be knowing who to put my money in to trust in some bond or some pool or something like that. But this is available on Amazon. It's also available on Kindle. The audio version soon coming to Audible. So check it out on Google, Divine Wholeness. I think there's links below. And if you want to know anything else about cryptocurrencies or even the stock market, feel free to comment, send me a message. You can find me on my Telegram group below. So till then, make sure you got your iris more, so be keeping healthy. And I'll see you on the other side. Goodbye.